we got to talk about our overlords, the Federal Reserve, which are looking to launch FedNow, a banking program that they've been working on for the last few years. They debuted this mostly in 2020, and they've been tinkering with it. In July of 2023, they're going to launch this. It's essentially a payment program that will allow banks and others to move dollars through the Federal Reserve System very, very quickly. It's not quite a CBDC, which I'm sure we'll talk about in a second, but it's a step in that direction where you're able to move and settle and clear dollars very quickly through the financial system. For now, it's mainly going to be between the Federal Reserve and financial intermediaries that sign up for it, like a banking partner. But in the future, it can be used for settling things as simple as a bill. Why would you use something like this? Well, you might want to have the backing of the Federal Reserve. You might not want to be trusting these banks right now. And I think the Fed has noticed this. They've been working on this program for quite a while, and it's kind of an inauspicious moment for it to launch. I really want to get your take on this. I want to see the tinfoil hat come out. I want to see it all.
Okay, I'll put on my tinfoil hat for you. So, I mean, when we're looking at a system like this, there's a couple of different things here. First off, people clearly want instant transactions, right? One of the things that's characterized our banking system, though, is that it really is built on top of the commercial banks. Even the Federal Reserve actually has shareholders, which are the commercial banks, which is how it maintains its so-called independence from sort of the rest of the political, financial, et cetera system. Since sort of the beginning of the cryptocurrency era, we've seen this push to make it so that the traditional financial system actually works a lot closer to how the cryptocurrency systems work in terms of the speed by which you're able to make these types of transfers. I remember when I started talking about Bitcoin back in 2012, it used to take something like 6 days for a wire transfer to move from one place to another. And that wasn't because of technical limitations. That was because each of the banks, sort of each day, a different bank collects interest from essentially holding it overnight based on the overnight interest rate. And so there's a mismatch, not in terms of technical capabilities, but in terms of behavioral and sort of incentive stuff, right? The banks don't have an incentive to move your money any faster than you are willing to tolerate because they can collect interest on that capital while it is in transit. And so we saw after Bitcoin came out and started demonstrating to people would say, oh, you could send a transfer in 1 day, in 1 hour. Then suddenly the banking system sped up a lot. Within the next 3 years, we saw kind of this push towards that. And this is a continuation of trend for me. The interesting part about this is that, as you said, this is something that right now applies to banks, but it's something that there's not really a reason why it couldn't apply to normal people and couldn't apply to payment systems more broadly. The question is, does the US government, does the US sort of power structure want to support a commercial banking sector that has a lot of power? Because they do in our system today. This seems like it's a step towards that not being as true. And it will be interesting to see how they attempt to navigate this as the regulators of these banks, keeping them happy, keeping them solvent, while at the same time allowing these systems to improve in ways that actually are kind of damaging to banks, at least according to their traditional business model. So that's my take on it. Again, relatively minor story, but a continuation sort of trend that we've broadly seen here to date. Zach, what do you think?
I saw Jen. She had a spicy take, Bruin. I saw it. I saw it. So I'm tossing to her.
I'll go super quick and I'll throw it back to you, Zach, because you got the Mr. Burns hands going right now. And so I bet your take is even spicier. But my first take is, why is it called FedNow? It sounds so much like the Fed came up with this name. Sounds so weird. I don't like it. My more nuanced take, I think, is that if we juxtapose this news with the news that we've spoken about previously on this show with banks, largely outside of North America, experimenting with DeFi for this kind of like CeFi, DeFi future, this makes sense. And Adam, to your point, I think that this proves that the government is looking at what's going on, is looking at what consumers want from their banking services. And I think it shows that they are getting scared. And so this like FedNow product, I understand it. The one thing that I kind of looked at with a skeptical eye was that some Fed officials said that the program could replace the need for a CBDC. I looked at this in a totally different light. I think this just paves the road for a CBDC. I think FedNow starts offering this service to commercial banks. Then, like Adam described, regular everyday retail consumers can start using it for things like paying bills. I think it paves the road so nicely for a CBDC to be introduced in a really seamless way to drive people away from some of the offerings that crypto offer. Zach?
Yeah, I just wanted to comment on the kind of the crypto angle, and I think it does kind of undercut what's emerging as a nice talking point for the crypto sector. You saw it communicated, I thought, very capably in a Coinbase commercial about the existing system and these incumbent money systems being so high friction and taking so long in ways that the rest of our world has become so much quicker, right? So the idea that crypto is a solution to existing financial rails that can be quicker, that can provide instant settlement, that can provide some additional benefits, here is sort of blocked, I think, by FedNow rushing to deliver some of those same benefits that people, just normal people, find really frustrating with the financial system, right? In terms of, again, how long it takes to send money overseas, how costly that is, et cetera, et cetera. So if the Fed can sort of harness that energy and co-opt some of that energy, I feel like it does sort of undermine what is emerging as a really nice narrative piece for why blockchain technology can be a better settlement layer relative to the things that we have in the world today. So that's, to me, sort of the interesting sort of like horse race aspect of it all. But I'll toss it to Adam for his last thoughts.
Yeah, just real quick. I mean, what do the traditional financial system and gold have in common? We use them because of tradition that doesn't really make sense anymore, right? If you look at the reason why people use bank accounts 20 years ago versus today, 20 years ago, you needed to have a bank account in order to really make any type of payments that didn't involve cash. What the FedNow system presents and what cryptocurrency presents and many other competing systems present is an alternative for how you could use money, how you could store your money and use your money without requiring a bank. And that is so existential to the fundamental business of banking as it exists today that it is hard to fathom. So this is actually a shot across the bow from the Federal Reserve, in contrast to sort of what we're talking about in the world of cryptocurrency. But again, it comes down to, why do you have your money in a bank? Because we're used to it. It's not for the interest. It's not for anything else.